Welcome to our second quarter fiscal year 2025 financial results presentation. In today's call, on slide 2, we'll go over an outline of Q2 fiscal year 2025 consolidated financial results. We'll go over a few of the key topics that have happened in the first half of this year and outlook for the rest of the remaining half of the year. We'll touch on briefly the results of the Special Investigation Committee report that was issued today. And then finally, we'll move into a Q&A session where we'll happily take any questions and or comments from any of the attendees. Initially, on slide 4 is our performance overview for the first half of fiscal year 2025. As of note, to date, we've had revenue of 8.543 billion yen between the drug discovery business, the Peptidrine business, and the radiopharmaceutical business, PDR. At current, core operating profits is minus 2.6, roughly minus 2.6 billion yen. Net income is minus roughly 2.1 billion yen. Our forecasts for the full fiscal year remain unchanged from those provided in February, and we are still anticipating reaching our revenue target forecast of 49 billion yen, in addition to the core operating profit, and net income values listed on slide 4. On slide 5 is just a little bit further information around the Peptidrine side of the business for this fiscal year. We have had a relatively, from a financial perspective, a relatively low first half of the year with revenues coming in at around 0.8 billion yen. And we're expecting the second half of this year to be quite significant in helping us reach our intended forecast numbers. Largely in the second half, again, I think the highlight is the out-licensing of our myostatin program, which I will touch on subsequently. We also have a number of other opportunities we're currently pursuing, in addition to roughly 3.7 or so billion yen worth of expected milestones and or other R&D funding considerations we're expecting to receive. 2025 actually looks very similar to 2022 for us. For those who remember, in 2022 also, we had closed 2 large deals in December, allowing us to hit our significant or exceed our forecast for that year. Unfortunately, 2025 is shaping up to be something similar to that, where we are looking to having a number of these close later at the end of the year, instead of earlier in the year like we did in 2024. So, on the subsequent slide, slide 6, is in relation to the PDR radiopharm business. The company continues to operate very solidly, with largely quarter-on-quarter earnings coming in close to roughly 4 billion yen on average. We are seeing increasing sales of Amyvid, the Alzheimer's diagnostic agent, basically week over week and quarter over quarter. So this has been a continuing trend from the end of last year, and is extremely positive. So we're very happy to see that. We're also expecting to see our therapeutic and the RIAT MIBG to further see use expansion, which also should allow for further sales of that product. And I think we're seeing just overall, good sales across the other PET imaging products that we have, and also our related kind of DX hardware and software related services that are being that the company has been providing and focusing on, are also seeing increasing growth. So that's very positive. And these are, of course, offset a little bit by an overall global general market decline in simply just the use of SPECT imaging. So As many of you may be aware, SPECT imaging is in essence an older type of technology, certainly at least in comparison to PET CT and MRI. And those type of imaging technologies have seen continued refinement, improvement, technology innovations that are making them significantly improve the diagnostic capabilities and efficiency. So I think this is a global thing that's actually happening in the market, and nothing specific, of course, to PDR radiopharma at all. But we believe we're well positioned to see increasing in PET products as we see slow decrease in SPECT products. Nicely, though, the SPECT products have largely stabilized over the last couple of quarters. So this slow market decline at this stage, it is very slow. So I think that is an overall positive. It is not declining rapidly or something that we need to be concerned with. So we think we're in the optimal position. Also, as everyone is very much aware, for PDR radiopharma, the end goal, of course, is to get the therapeutics moving toward the market, bringing those to market, and securing the related product sales will be a key driver, of course, for future PDR radiopharma growth, which we'll be touching on in subsequent slides. On slide 7 is just the current consolidated balance sheet through the first half of the year. Of note, of course, is that we remain net debt negative overall, which we had announced happened at the end of in 2024, and of course we've maintained that. Additional is we are continuing to trend in the right direction as far as the ratio of equity attributable to owners of the parent to total assets, right? And so this we had dropped down to about 50% on the acquisition of PDR radiopharma, and since that time it has of course slowly grown, and as of this moment is around 68%. And again, we're aiming in the short term to pass 60%, which we've now done. We had mentioned previously in 2024 that was the short-term goal, so we've actually achieved that already. And then the next level is to get us into the 70 to 80% range. And so I think everyone here feels we're very much on target to also achieve that goal in the future. So the business overall is doing fantastic. On slide 8 highlights the current consolidated cash flow position. We closed fiscal year 2024 with roughly 48 billion in cash equivalents on hand. As of now, the end of June here, or the close of Q2, we have roughly 33.3 billion Japanese yen of cash and cash equivalents. The decrease in that cash position, of course, was a big part of that was associated with income taxes that were paid for and adjustments that were paid for in the early part of the year, and then of course impacts to cash flow on the acquisition of both PeptiDream shares and LinkMed shares that was done, and then of course we have outstanding loan payments that have been made over the first half of the year, all contributing to a reduction in that current cash position. Again, as we're very much slated to see significant revenue in the second half of the year, we believe we're well positioned to get us back to where we want it to be. So still, again, very well, excellent cash position to continue to operate on our overall strategy. On slide 10 is getting into some of the topics we wanted to touch on during the call today. This slide outlines what has become really our 5 core areas of focus, as we separate this into two general categories, with a radiopharmaceutical business, of course, on one side, and then the non-radiopharmaceutical business on the other, which is largely composed of 4 main core areas: peptide therapeutics, both oral and injectable peptide therapeutics, as well as programs within the peptide drug conjugate space, but calling these oligo PDCs, cytotox PDCs, and then to the right is MPCs. And so these 4 core areas sit in our non-radiopharmaceutical business, and then the 5th area, of course, is the radiopharmaceutical business. And these are really what the company is very much focused on, delivering new agents in, new programs in. On the next slide, on slide 11, this just highlights a few of the achievements that occurred in the first half of 2025. So as everyone is aware, our CA9 program, which is a wholly owned in-house peptidin program, the results of the phase 0 study, which was performed in 2024, were presented at the ASCO GU conference in February with excellent feedback. We also presented at the Nuclear Medicine Annual Meeting in June the in vivo study results of the actinium-225 agent in a colorectal cancer model. And this program is nicely progressing forward. We have just started to have pre-IND meetings with the FDA. Actually, have already started to get feedback in preparation for a future IND filing, of course. We've also now selected our clinical CRO that we will be using to run this study in the United States, was recently done. And so this program is moving exceptionally well as our first wholly owned program to take into the clinic sometime in early 26. I think once we have definitive, of course, dates, we will make that information public. Right now, it's slated to happen sometime in early 26, we believe. The second program that we had announced at the end of last year was our 18.2. This is being developed for both gastric cancer and pancreatic cancer. We presented some of these results also at the SNMMI meeting in June and also at the AACR meeting in April. At current, we're planning to follow a similar scheme to the CA9 program and anticipating running a phase 0 study here in Japan in certain cancer patients utilizing the diagnostic. The goal of those phase 0 studies, very similar to the CA9, is really confirm that this molecule in humans, of course, locates to tumors and get some early kind of PK, PD read on the program, which is very confidence inspiring. We have high hopes for this program. We do intend for the 18.2, similar to the CA9, to take this into a phase 1 study ourselves. And we are actually investigating whether this study will be run in the US, similar to CA9, or whether we're also investigating potentially taking this into a phase 1 in Australia or China as potential other options. I would say at this stage, all of those options are on the table and being investigated for the various pros and cons that they may entail. So again, something around 18.2, we'll announce more once we have any definitive decisions made on that program. But moving extremely well, IND package is going very, very, very well. So we like where that program sits. The third topic is around the curium, lutetium, PSMA INT, and also the copper-based PSMA INT, so the therapeutic lutetium, the diagnostic copper, that we announced in October of 2024. We have been working with Curium very closely. The PDR folks have been working with Curium very closely to get together the clinical development and commercialization plan in Japan. We've already had numerous interactions and discussions with the PMDA about the design of this study. And that culminated in the IND application being filed for clinical study of both of these, announced just recently here in July of 2025. And so as of note, these are actually registrational studies. So these will be conducted as bridging studies into Japan, utilizing the phase 3 data that had been generated overseas by Curium to run these studies and then seek approval for both compounds subsequent. The fourth topic here, excitingly, is also our Glypican-3 project that had came from our collaboration with Reid Bio. So this is a peptidin, of course, identified peptide conjugated to a chelator, and that chelator contains either the therapeutic actinium-225 or the diagnostic gallium-68. That phase 1A, 1B study commenced in late 2024, early 2025, and we announced that in January 2025. As many of you would be aware, for the Reid Bio, for this Glypican-3 program, PeptiDream retains Japan rights, or the option to own Japan rights, development commercialization rights for this program, for both programs, in which we intend, of course, to exercise that option. And once the phase 1 study is completed in the United States, that we would then work with Reid Bio to hopefully join a registrational study subsequent to that. Again, as we get closer to those definitive decisions on those, we'll make those public, but we're very excited about this program moving forward. It was the first one to come from that Reid Bio, which is now Reid Bio BMS collaboration. The last one, the topic number 5, is also very exciting from our Novartis collaboration. Is the first program also to originate there. This moved into a phase 1A, 1B in December of 2024. It has against the target FAP, which is a tumor microenvironment target. So FAP is not expressed directly on the tumors themselves, but in fact expressed on fibroblasts that are a part of the cancer microenvironment. The therapeutic is using lutetium, and the diagnostic is using gallium. And we were very excited that Novartis actually orally presented these preclinical results of both of these programs at AACR this year in April. And it was selected as one of the leading oral presentations to do. And it was really nice to see. And they positioned this as a best-in-class compound against the FAP target. And I think that's saying something. So as many of you are largely aware, Lutathera was kind of one of the first, I would say, the first major, I guess, targeted RI therapeutic against SSTR2 target. And then we have, of course, Pluvicto and the PSMA INT example that are against the PSMA target as kind of the second big target in targeted radiotherapeutics. And now FAP is largely believed to be the third next large one. And because of the fact that FAP is in fact expressed in the tumor microenvironment, there's potentially 30 different types of tumors that FAP could be utilized. So this actually has a very, very large potential market in comparison, larger than both Lutathera and PSMA targeting, Pluvicto agents. So significant upside in the FAP market. So very excited to actually have this, announced and moving forward. So those are kind of the 5, I'd say, highest achievements, highest highlights that we saw happen in the first half of 2025. On slide 12 is the current updated pipeline. We've made a couple of tweaks to this to try to make it a little bit easier to understand the type of molecule we're talking about. So as everyone is aware, the ATSM agent is a small molecule. So we've listed there as such now, SM, and then linked to an RI payload. The same for the PSMA INT program, right? That is a small molecule that was discovered, of course, originated from Curium. And then the Glypican-3 on down are all PeptiDream discovered and optimized peptide RI conjugates. So again, very excited to start seeing these progress, both across our collaboration products, programs, and also our in-house programs. And I think everyone should accept significantly more advances to come here. If you go to slide 13, it's kind of a general outlook as we look forward across the second half of 2025, of course, and then into 2026. ATSM, that program is in a phase 3, a registrational trial here in Japan, and that continues to progress well. As what I just described, the PSMA INT agent, we expect that both agents, both the diagnostic and therapeutic, to initiate clinical trials in the near future. I'm very much looking forward to those moving forward. Glypican 3, of course, is underway. CA9, we expect again the phase 1 in the US to commence sometime in early 2026. Of course, we'll update accordingly. And 18.2 is being prepared, as I mentioned, for the phase 0 study. MIBG also, as I mentioned, we're expecting additional indication expansion around this product that should further increase sales of that product. Lastly, I think on new clinical programs. So again, we had FAT already announced. We expect actually additional programs to be announced here in the second half of 2025. Which I think will be exciting coming out of our partnerships. And so we will give as much color to those announcements as we can, but we will see additional clinical starts of other collaboration programs this year. We additionally will see also new announcements on new development candidates to come. So very much looking forward to those announcements in the second half of the year. And also we're actually in discussion, of course, in potential new partnerships in this radiopharmaceutical space, of course, in both in licensing potential new compounds and new programs into the Japan market, and also potential discovery collaborations and or partnering collaborations on PeptiDream assets with foreign companies. So there's active discussion across a number of these avenues, which is exciting for us. So I think the radiopharmaceutical business is going exceptionally well for us overall. And we could continue to focus on, advancing the pipeline, but also expanding with new clinical candidates and new development candidates, and continue the hard work there. On slide 14 is a bit highlighting a little bit how we envision, the growth drivers around the radiopharmaceutical business. The business that we till now is largely being driven, of course, by diagnostic sales. And the real goal, of course, is to bring on the targeted therapeutics in the near future. This kind of first wave of assets being around the PSMA and the ATSM, that will both, of course, be in late-stage registrational studies. We're hoping to bring those to the market, in the 2027, 2028 kind of timeframes. And seeing those start to contribute, the therapeutics to start to contribute to revenue from 27, 28 onward kind of timeframes. So additionally, again, we're going to continue our pace of announcing hopefully 1 to 2 new clinical programs per year and continue to fill out our pipeline to drive future revenue growth. On the diagnostic side, we will continue to be looking to add additional diagnostic agents, continue to focus on driving the growth of Amyvid sales, which is being helped in part by of course, Alzheimer's therapeutic sales that are slowly showing traction in Japan. And so we think there's an exciting future for this Amyvid product, of course. And we also think there's a strong possibility, will take some time, but for the Talvid project, which we actually gained approval on, of course, last year, it will take time to kind of solidify the market there. But we do see a good future for both of these Alzheimer's imaging agents. Additionally, again, the existing diagnostics that are being sold or the additional non-targeted therapeutics that are being sold to continue to focus on indication expansion, formulation expansion. And I think there's a strong focus on the PDR radiopharma side on digital solutions also, right? Kind of the therapeutic diagnostic adjacent products and portfolio of offerings that we can do to really help grow the market and attain additional revenue from. So again, overall, very excited with the current state of the radiopharmaceutical business and looking forward to some additional exciting news happening in the second half of this year. On slide 15, in regards to the non-radiopharmaceutical side of the business, a couple of key highlights here. Number one being, of course, around our oral myostatin inhibitor program, which I'm sure there might be some questions on. We kind of kicked this off at JPM at the beginning of the year, where we tested the waters and discussed with a number of large pharmaceutical companies their interest in this program. Of course, that interest was significant, as you might expect. We continue to generate additional data around the program. Exciting oral bioavailability in large animals was also conducted in the first half of this year. We also showed additional muscle preservation benefits, both with daily and weekly administrations, and we kind of expanded that data also in the first half of this year, really allowing us to actually open up, one, generate a very strong data package around the asset. Two, we were able to get our virtual data room, up and going roughly in the May timeframe, and started bringing on, discussing with companies, large pharma companies, to bring them into the data room and start having the scientific discussions around this asset. And so those discussions have continued over the summer months here. Of course, navigating the schedules, the summer schedules of all of these large pharma companies, but we've had, I think, robust interest in the program. We had also recently have engaged the services of a financial advisor to assist us with this partnering process, in part because of the interest that the program has generated, and that a financial advisor would do an excellent job and facilitate, of course, getting the maximum value for this program, but also making sure that the process was run extremely fairly, and handle the various companies that we're actually dealing with, all of them large pharma at this stage. This program was also got a very nice boost in support, I think, from the recent findings that were explained in June from Regeneron, Eli Lilly, and Scholar Rock, all of which who showed compelling phase 2 data, really supporting the ability of myostatin pathway inhibitors to dramatically reduce lean muscle mass. The lean muscle mass that's often associated with the GLP-1 weight loss drugs. And so that was excellent timing for that data to kind of come out, and very much a nice, tailwind for the partnering of this program, given that we have the only orally bioavailable myostatin pathway inhibitor at this stage. So exciting what the second half will be. I'm sure there might be an additional question to come here. On number 2, myostatin, our oral myostatin program is just one of many. As I mentioned, this is on the non-radiopharmaceutical side, focused on oral peptide therapeutics, is a core area. We have a number of programs in collaboration that are now getting closer and closer to naming development candidates. And so I do think in the next 6 to 12 months, there's going to be news on potential partner development candidates being announced. So I'm very excited about that to be able to do. In addition to our own in-house efforts, one of which is the oral IL-17 program. We've kind of mentioned this a little bit in the past. We've never really shown much data around it, but I think you'll hear more at our R&D day this year. Hopefully we intend, or I anticipate making this a program for presentation and discussion. I think we have an excellent compound here. It's showing excellent oral bioavailability and excellent efficacy in the animal models. And we just continue to generate data around that program. Looking for that probably to partner that in 2026 is how I would probably view that at this stage. But there's significant excitement around the program. We have additional, beyond that, we have additional other oral bioavailable programs also ongoing, and we've added a couple of new programs in the first half of 2025 also. So very much focusing on generating, as is written, robust data packages to really maximize the value of these programs, both in collaboration, but also in out-licensing. So, and the third topic is PDCs and MPCs. We're nearing the nominations of the first peptide drug conjugate, peptide cytotox conjugate programs. And we're also nearing the first announcements or nominations on the peptide oligoconjugate development candidate space, arising from various discovery collaborations. So this is something, again, I think this is probably in the next 6 to 18 months. There should be a good amount of news on this specific topic. These are deals that we've had underway now for 3 years and 4 years, and are really starting to see kind of the exceptional progress that has been made over this time to actually get development candidates coming out of this. So I'm very, very, again, I think this is going to be very impactful for the market and for share price, for people to see actual that it's just not research, that things are actually arising and development candidates are being produced out of these efforts. So looking forward to that. The other high value target, we've talked about MPCs in the past at a high level. But recently in the first half of 2025, we've generated some exceptional data showing some of these tumor engagers that we've created in-house, showing really, really powerful tumor killing efficacy. Again, I think the MPC data is something I'm hopeful. We have to get our patent strategy in order, but I'm hopeful that maybe that's something we can talk about on our R&D day also, potentially. We are using some of that data in discussions with some of our large pharmaceutical company partners who are very much interested in potentially progressing an MPC approach to either combine with their other peptide drug conjugate approach and or use within other type of combination style strategies. So I do think the MPC field for us is going to be significant, especially this in-house, the immune engager field is going to be quite large for us, and is going to result in a number of very favorable deals for us from 2026 onward, possibly. And lastly, is just around the S2 protein inhibitor, the COVID program that sits with PeptiAid. This did in fact we just announced, in June, the last patient, last visit in the US phase 1 clinical trial of PA001. Thus far, of course, it's been extremely well tolerated with no serious adverse events observed and demonstrating a very favorable safety and tolerability profile. We are expecting the report from the clinical study to come out before year end. We do not at this time. I think at that time we'll announce what next plans there are for this program. But as most of you can probably imagine, we largely believe that this program will probably be in a pause position unless some kind of real significant interest comes from any partners and or whether a second generation pandemic comes back. Hopefully not, of course, that warrants its positioning to continue forward. So on slide 16, this is the current status of our non-radiopharmaceutical pipeline. I think one of the larger excitements, of course, for us to see in the second half of 25 will be our GHR program that is partnered with Alexion AstraZeneca moving forward into a phase 2. So we're very much looking forward to that. We probably will not have too much news on the two Merck peptide programs that are actually ongoing in phase 1s. Again, those are any information related to those programs has to be disclosed in concert with Merck, and we will do so as we are allowed. On the lower part of this stage, as I mentioned, the biggest news will be in the second half of the year around the myostatin program, and then we've also listed, of course, the other 4 main categories. That again, I think over the next 6 to 18 months, we should see a significant expansion of our non-radiopharmaceutical pipeline. So it looks a little thin at this stage from all the discovery efforts that are going on, but I think this is going to see exceptional progress here coming. Looking forward to it. On slide 17, again, is kind of just highlighting some of what I just mentioned. GHR probably being the highlight in the second half. I do think there will be other additional news, and hopefully that we'll be able to disclose. Potentially also new clinical programs as they get announced for development candidates coming from our partnerships, as I mentioned, right? So this is still, again, a very robust area for us, and I think things are going extremely well. On slide 18, it's just in relation to the growth drivers in this non-radiopharmaceutical sector. We continue to be focused on generating, progressing the collaborations and then generating new assets internally to a certain stage for us to then partner and out-license. So there has been in the prior days, our model was largely focused on just a collaboration discovery model. And of course, that has now expanded to not only be collaboration-based discovery programs, but also, of course, to generate further in-house programs to then generate excitement and out licensing, really around the goal of maximizing the value of all of those programs and our R&D dollars that we use here. And so I think going forward, we expect to see, additional new collaborations, new expansions of deals, and certain out licensing upfront fees in relation to out licensing of certain programs, with the real goal of expanding the pipeline and getting these products to market at sometime in the future to enjoy the sales royalties that those comes with. So very much on track across the non-radiopharmaceutical business. On slide 19 is just the consolidated financial forecasts. As I mentioned earlier, we have no change from the numbers that we announced in February of this year. We still very much expect to meet these numbers, and we're looking forward to doing so. On slide 20 is a slide that we have used a number of times now to attempt to describe kind of the slight shift in the business over the years. We've been around now for 19 years. And of course, stage one of the company was really focused on the PDPS platform, the discovery platform, and establishing a very strong global reputation as the leader in peptide discovery, expanding our R&D capabilities once we moved to our current site in 2017. That allowed us to start expanding those capabilities and expand our early stage pipeline. And I think we certainly did that very well. And that really allowed us to give us a very strong base of revenue around the 10 billion Japanese yen per year. Then the shift has happened when we acquired the radiopharmaceutical company, really the combination of the radiopharmaceutical, the PDR business, but also actually now PD moving into the next phase of its growth, of seeing more programs and larger deal economics, of course, allowed us to reach the 30 billion Japanese yen per year. And now our kind of next goal is really around reaching the 50 billion yen revenue goal, which should happen, fingers crossed, happens, of course, soon here, even though we announced 49 billion yen for 2025, sometime soon. And then after that, the next phase will be reaching 100 billion Japanese yen in revenue. I think the company is extremely focused on, of course, maximizing the synergy with the Japanese radiopharmaceutical business. And then again, focused on these 5 core areas for discovery and the identification of development candidates that we can partner and see those move forward into clinical testing. So as we will continue to focus on expanding our robust pipeline and look forward to continue to create high value assets to out license. On slide 21, just briefly, 2 large capital projects underway, very excitingly. One is really the expansion of PeptiDream at our current site. So as is listed in this illustration on slide 21, you can see to the left is our current headquarters and research facility. And then we are now on the land next door, which we had bought a number of years ago. We finally have decided exactly what we wanted to use this land for and the exact type of facility we wanted to make. And the real goal is to expand our capabilities further to really unlock additional asset creation and speed. This building is currently in the design stage, and so I think once we have more specific information on costs and definitive timelines, we will make that news public. But we are aiming for this to be completed in 2028 is the current anticipated timeline. So again, it's in the exciting design stages and very much looking for that project to get underway. Also on slide 22, on the PDR radiopharma side of the business, as we announced at the end of last year, is seeing this project progress. We have identified the site, as we mentioned, in Kazusa Academia Park. It's proximal, excellently well placed between Narita and Haneda Airport, as is shown on the map there. And we're also now in the building design stages of this project. Again, similarly, once we have definitive information on costs and timelines, these will also be announced. But we are also expecting this to hopefully come online in the 2028 2000 or in the latest early 2029 kind of time frame and be fully operational by then. So exciting. These will add, expand our manufacturing capacity and bring much needed space for us to continue to deliver on our strategy of bringing exciting diagnostics and targeted therapeutics to the Japan market. Lastly, on slide 24, as we shared today, I believe actually the Special Investigation Committee report the full report was only released in Japanese, but we did make a TSC, of course, statement today that had both an English and Japanese version to that. So I would invite those to potentially use translation software, I guess, if you wish to look into the full Japanese versions of the reports that were submitted. The Special Investigation Committee, as everyone knows, we had created this in May to investigate the possibility that there was inappropriate ordering and removal of research reagents occurring at the company by our former COO, who was previously in charge of the company's purchasing department. Within the report, as anyone can see, we did in fact confirm, of course, that research reagents were in fact ordered by this individual outside of our normal ordering procedures, unauthorized, without any other executive or board members' knowledge, and that these reagents were taken off-site for uses that are not clear at this stage. Again, this was completely in violation of company rules, company procedures, and in direct breach of this person's responsibility and role within the company. During this investigation, during the Special Investigations Committee's investigation of this, what we're calling case 1, this inappropriate removal of agents, they also uncovered additional information, which showed that this same person, our previous former COO, also was a party to a variety of different service agreements or consulting agreements that he was providing services to companies that had relationships with PeptiDream. Again, very easily to understand as a conflict of interest against company policy, with no approval from the board or any other executive, and completely hidden from PeptiDream. And so we take both of these issues extremely seriously, and PeptiDream, now with the Special Investigation Committee report, we are looking into all legal options to pursue this case against this individual. Once anything is decided, of course, we will make that public, but this is a significant breach of trust for the company. Lastly, I think is important to note, though, in regards to the inappropriate ordering of reagents, all of those reagents, these are just general research reagents, these weren't PeptiDream specific reagents, were expensed at the time of acquisition, and so there is no additional expense recognition that will be necessary in our financial statements. So we do not expect any significant impact to the financial statements or any need for revising, say, prior financial statements in regards to this case. And for case 2, also these third-party agreements, unauthorized and secret third-party agreements that he had, we also do not expect these to have any specific financial impact to our financial statements that would require any type of revision or restating. And so I think that is important to note from a financial perspective, of course, or financial reporting perspective. That does not, of course, dilute or change the seriousness of this behavior and what happened here at PeptiDream. There will be more to come on both these topics, and of course, I'm happy to answer the best I can any questions that may arise.